Let's take a look at this. A Lever Weekly, the headline, banks say let them eat interest. And that's the interest rate hikes that is. Here we go again. The feds did not hesitate to bail out the banks, but if everyday Americans need a bailout, the first question out of their mouths is how much will it cost and how can we afford it? Let's take a look at this important point. That means that while ordinary consumer borrowers struggle, banks will have access to what one financial analyst recently called the biggest bailout of the banking sector since the great financial crises. A new Fed lending facility launched the same day the central bank voted to bail out Silicon Valley Bank has already injected more than $53 billion into financial institutions at highly favorable terms. The institutions never worry about consequences. They never ever do because they are a part of the owner-donor class, and the owner-donor class never faces consequences. There's a good reason for that, and let's further explore what was written in the Lever. After Fed Chairman Jerome Powell, a former private equity executive, declared war on workers in order to drive down wages and fight inflation last year, it looked briefly like the banks might become collateral damage. But the Fed moved quickly to shield those banks, very quickly, and only the banks, from the impact of its actions before announcing Wednesday that it would raise rates by another quarter point. Thank you, Rebecca, for this reporting. Only the banks. Underline it, underscore it, bold it, exclamation point, message in a bottle, only the banks. And a smooth runway for the banks is a rigged system. Let's take a look at this reporting coming from Breaking Points.
Continuing to process the fallout after SVB failed, Signature Bank failed, and one of the stories we're going to continue to focus in on is exactly how this happened, what politicians were complicit in rolling back regulations, and what exactly some of those corrupt ties were. Let's go ahead and put this up on the screen. It's from Bloomberg News. They noted that Signature Bank, this is again one of the ones that collapsed and we bailed them out, through a fundraiser for the congressman who is now probing how it failed. GOP's McHenry chairs the House Financial Services Committee. The campaign says the donations are not going to be processed from the event, but it illustrates the incredibly cozy ties between the legislators who are supposed to be overseeing this sector and the banks themselves.
I mean, truly, how can the people who are supposed to be watching and regulating get benefit from the people who are destroying this country in that way, in terms of not having the banks regulated in a deep way, not holding the banking industry accountable? And you got this man watching the watchers, almost like asking the fox to watch the hen house. And the game does favor the owner donors, make no mistake. Take a look at this further reporting on Breaking Points.
It's worth noting that this same member of Congress has been a favorite of Signature Bank employees since 2017. They have given him a little more than $188,000. That is almost triple the $66,000 that they've given to Minnesota's Tina Smith, a Democratic member of the Senate Banking Committee, who has received the second highest amount from them. So you can see how the game is played.
The game indeed, and this game is rigged and is both sides. It is both Democrats and Republicans who answer to their owner donors at the expense of everyday Americans. Now, this situation reminds me of a quote attributed to French Queen Marie Antoinette during the French Revolution when she was told that peasants were starving, and she allegedly said, "Let them eat cake." Out of touch as most leaders are, that is what let them eat cake stands for. They are totally oblivious to the suffering of the everyday people in this country and do not act with a sense of urgency when it comes to what is happening to people in the hoods where they are misunderstood, but instead they continue to prop up the elite no matter how they try to run this country into the ground. Yasmin, your thoughts?
Yeah, and we all know that the French have no chill. We can see what they're doing over there, and they beheaded Marie Antoinette for being so out of touch, whether or not she actually said that quote. But to call all of this a huge conflict of interest is an understatement. But whenever we hear stories like this, it always is coming from the angle that these banks and these corporations are too big to fail. And that if they fail, millions of Americans will suffer as a result, whether directly or indirectly. And while there might be some truth to that, we also have to think that if it would be so disastrous for these institutions to fail, why aren't we dealing with them more delicately, with more oversight and more regulation where more regulation makes sense? We do this all the time in this country. We keep pushing and pushing until something breaks, and then we scramble to pick up the pieces and stick it all back together, however shoddy of a job that we have to do. We're not into prevention here in this country. And thinking more long term, the instability of these banking institutions actually prevents younger people from making long-term plans. We're unable to do so because we don't trust the institutions that we're investing in or otherwise putting our money into to be around for a long time. And economically, that's not actually a good thing. These institutions rely on people participating within them and putting money into them. And if we don't want to do that, it's going to be very difficult for them to operate in the future. They need to earn back the public trust, and they need to work with our government to do that.
Yeah, Yasmin, and they need to be regulated and not giving money to the beneficiary. I mean, it is absolutely asinine to have the chairman of this committee receive almost $200,000 from this particular bank that is supposed to be regulated. How about the American people are too big to fail for once? I like that a whole lot better. The American people are too big to fail, and we shouldn't allow any institution to take advantage of the American people and bring our financial sector crashing down. There's something selfish about that, and something very unpatriotic about the whole thing. And there should be consequences and repercussions